Hello, everyone. Welcome to Seven Environmental's Inside ESG, where we meet with leaders in sustainability, climate, and ESG space. This series aims to provide a clear view into the ever-changing landscape of sustainability practices. I'm Doron, Marketing Director for Seven Environmental, an AI-driven compliance solution focusing on streamlining data collection and reporting for ESG, EHS, and risk management. Today, I'm very excited to welcome Pavel Molchanov, Investment Strategy Analyst for Raymond James. Hey, Pavel.
Hi, Doron. Thanks for having me.
Thanks for joining us. Pavel Molchanov joined Raymond James Investment Strategy team in 2025. Following 21 years in equity research, during the bulk of his time in equity research, he covered companies in a wide range of industries, including renewable energy and clean tech, solar, wind, and water technology, among others. He has been recognized in the Starmine Top Analyst Survey, the Forbes Blue Chip Analyst Survey, and the Wall Street Journal Best on the Street Survey. Pavel graduated from Duke University in 2003 with a Bachelor of Science degree in economics. He is a member of the Board of Visitors at the University of North Carolina and its Institute for the Environment. In addition, Pavel serves as an advisor to several environmental projects and organizations. Pavel, again, thank you for joining us today. Before we dive in, would you mind sharing with us a bit about yourself? And if you can, share with us where your sustainability journey began.
Well, thanks for kindly reading that bio. And as our listeners, glean from that bio, I've been involved in kind of the broader energy, including energy transition conversation for over 2 decades now. Fun fact, when I started doing all this about 20 years ago, the price of a PV module was $3 a watt, and today it's 7.5 cents. So I have watched, this kind of amazing mainstreaming of so many of the technologies that today people take for granted.
Right.
20 years ago, it was anything but taken for granted. So, 20 years ago, there were no electric vehicles that you could buy, in terms of mass produced cars. Again, solar was, 30 more than 30 times as expensive as it is today. The idea that people could have a battery at their house, or that a data center would have a hydrogen fuel cell, this was a fantasy, a science experiment.
Science fiction. Yeah.
And let me tell you, nobody was talking about carbon taxes at that point. So the changes that we've seen since then have been pretty overwhelming, mostly for the better, not 100%, but mostly. And happy to delve into some of those details with you.
Thanks, Pavel. Actually, I really enjoyed reading your bio. At first, as you mentioned, it is a journey, and when talking to people within our field, it's always, where did your sustainability or environmental journey started? And as you said, it sounds like an amazing journey. And to your point, you see how industry has evolved. We just visited last week the OMS Renewable Energy conference in Nashville, and you see how many people are involved in this, and it wasn't that, as you said, 2 decades ago. So it was great to see the technology evolving, from basic setup to new technology is evolving there. So it makes me kind of optimistic to see that. So great to hear about the journey. So let's dive into our discussion today. Looking at looking at the current turmoil in the markets, can you predict the effect on energy transition and environmental solutions?
Well, first of all, in the grand scheme of things,
Right.
the fact that we have some trade wars, U.S. Canada, U.S. China, the fact that the dollar has come down, the fact that stock market's down. I mean, this is all routine kind of business cycle dynamics in the grand scheme of things. This is not the end of the world, right?
No.
So over the last 20 years, I mean, what have we not seen, right? I mean, we had the global financial crisis, we had Brexit, we had the European debt crisis, we had COVID, we had not one but two oil market crashes during that time. And through all of that, the energy transition megatrend has continued. Now, of course, it goes without saying that when the financial markets are volatile, that's not the most pleasant experience. But again, I would just encourage people to kind of zoom out and have some historical perspective on what's currently going on. There is a little bit of a silver lining from the economic slowdown concerns that many investors have currently about the U.S. economy, and that is interest rates have come down. If we look at the last 3 years, so kind of the middle of COVID through the present, inflation, and as a result of inflation, higher interest rates have been a reality all over the world, right? This is not just the US story or a European story. This is all over the world. Higher interest rates are not a good thing for energy transition. Why? Because all of the technologies that we're really talking about in energy transition, building solar farms, wind farms, green hydrogen plants, EV charging stations, biogas plants, water treatment facilities. This is all infrastructure. This is capital intensive. It requires, hundreds of millions of dollars and sometimes billions of dollars to build these individual projects. And in aggregate, we're talking about hundreds of billions of dollars, right, on an annual basis. So when the cost of capital goes up, that is not helpful for the developers of energy transition infrastructure. And if it's bad news for them, it's also bad news for the equipment suppliers, the companies that manufacture all of the hardware, right? That these facilities need. So the fact that interest rates have actually cooled off in the last 30 to 60 days is good news for energy transition. So while again, none of this is kind of earth-shattering or game-changing, whether good or bad, the market volatility has a little bit of a silver lining too.
I like that you started it, that it's not the end of the world, especially coming from you. I think that's reassuring to a lot of people probably. And what you're saying about the interest rates, it's crucial, I think. And if you don't mind, kind of going more to that. So a lot of that, it's on the immediate, and obviously, I don't shoot the messenger, but I have to ask, as this is happening today or the past few days, but do you see any effect to that on the long term in terms of investment in renewable energy and in infrastructure, as you mentioned, or how do you see it for the longer run?
Well, everything in the energy sector, and that includes fossil fuels as well as renewable and low carbon solutions, is cyclical. And the cycles can be complex. They're also, by the way, different from country to country. So it's not entirely uniform around the world. So higher interest rates again, have been a headwind. It helps explain why perhaps the growth rates in some of the renewable energy adoption curves in kind of North America and Europe have not been quite as strong as perhaps some people expected if we had this conversation 3 or 4 years ago. So green hydrogen, for example, has definitely been slower to ramp. Let's remember, China, world's largest market for solar and for wind and for electric vehicles and for nuclear, construction of nuclear reactors. Not to mention the world's largest manufacturer of the equipment for all these things. So China has been, the leader, but we've also seen the consequences of China's dominance, which is, a lot of trade wars. I remind people that in the United States, tariffs on PV modules from China did not originate under Trump or under Biden. They actually go back to Obama in 2012. So this is now more than a decade ago. So trade wars and tariffs are, of course, by definition, raising the cost of equipment, and all else being equal, that is a headwind for, again, the various adoption curves of these technologies. But just going back to what we've seen, over the last 10, 15 years, all of the political turbulence, all of the commodity volatility and the financial and the currency volatility, and yet, by and large, we've seen the adoption curves moving up rather than down. Not in a perfectly straight line from year to year. There are some, periodic declines, but by and large, we've seen the adoption curves move forward, and I expect that to continue.
Well, thanks for elaborating on that. Moving to kind of a different subject. The past one that's close to my heart, I would say, the past year we felt a giant step forward in technology adoption and AI specifically. And as I always say, I don't think we can have a conversation without saying AI at some point. But specifically for us, and looking and talking to you as someone who feels very comfortable with innovation and science in general, how do you see these changes impacting the environmental sphere and sustainability reporting in connection to companies and in general?
So AI and energy has two different kind of linkages, and they go almost in opposite directions. So the one that everybody, I think, has been talking about is the increase in electricity demand as a result of the data center build out, particularly these hyperscale data centers that are so important for chatbots and kind of generative AI more broadly. Yes, we will need a lot of electricity. Some of these hyperscale data centers can use as much power as a mid-sized city of several 100,000 people. And, we know that in places like Virginia, the world hub of data center development, but also, places like, not all of them get enough attention, perhaps, Oslo, Norway, and Singapore, and Ohio. There's data center development in a lot of places, and yes, there will need to be a lot of electricity, and that electricity will need to be generated, and that electricity will need to be transmitted and distributed after it's generated. So all of that requires a lot of capital. Some of that electricity will be renewable, right? Wind, solar, hydro. Some of it will be natural gas, and some of it will be nuclear. So that's the supply side aspect of AI. There is another aspect which does not get enough attention, and that is using AI as a tool to develop innovative energy solutions, including for the electric grid. So here's an obvious example. Traditionally, when utilities manage the electric grid, how do they do that? So you picture the control room, and there's this big screen up front, and people sit at their computer and monitor things. It's a little bit old school. It's antiquated, right? A lot of manual kind of pushing buttons and trying to get supply and demand on the electric grid to balance. Well, AI can actually help provide faster and more efficient solutions for balancing supply and demand on the grid, which is important, for example, to reduce the number and severity of power outages. Right? Power outages occur by definition when supply and demand do not match. Well, if AI as a tool can be used to more efficiently manage the grid, I say more efficiently than human beings, generally speaking, can do that. That would be fascinating. Now, this is early. There are some regulatory complications to using AI for managing the grid, and certainly cybersecurity and other things need to be considered. But that's just a great use case for AI, right? It's not just about you and me having a conversation with chatbots. We can also use large enterprises, including utilities, can use AI to solve significant problems in the economy.
That is interesting, and I like that you covered both sides of it. One is the resources we need to actually supply AI, and I've seen reports on the different applications of AI and how we grow in terms of what resources we need to actually supply let's call it AI to the world. And on the other hand, yes, I actually saw a grid monitor room once, so it's before the AI age, but definitely that's optimizing the grid, and that goes, I'm guessing, to, well, we see it in our field and other fields also, optimizing resources. Thanks for that. I'm going back, if you don't mind, to talking again about policy and current events, and this time more in sustainability and environment. So there's been, except for the markets, what we've seen in the past as probably part of changes we see and impacting by the administration and other voices, I would say, across Europe and other places. We're seeing change in policy and regulations in the US, and following changes in the EU, specifically CSRD in Europe. What effect do you think these changes have on the financial markets?
So whenever we talk about what's happening in Washington, it's important to distinguish between two separate things. There are what we like to call carrots, and there are sticks. Carrots, tax credits for installing solar, buying electric vehicles, manufacturing a lot of equipment, and so on. Those are under the direction of Congress. And in general, these carrot policies are politically popular. Of course, they're more popular among Democrats than Republicans, but there are definitely Republicans in Congress who support these tax credits.
Right.
So that will be a long conversation as Congress debates kind of the broader changes to the tax code. The sticks are the regulatory policies that are under the control of the administration, and we have seen a lot of changes to the sticks, and we will see even more. It is, I think, very obvious and hardly a secret to anybody that when the Trump administration came in, they have an priority of reducing a lot of environmental, climate-related regulations that go back to the Biden administration or even earlier. Some of these policies will be changed relatively quickly. Others will take time, and there will certainly be some lawsuits. But the Trump administration has a lot of authority over the sticks, not so much over the carrots. One of the sticks that they have control over is the SEC. And if anybody is expecting the SEC to be aggressive about requiring companies to disclose their climate impact or their climate targets, that is not going to happen. Let's just be honest about that. Europe is very different. In Europe, there are carrots for energy transition, and there are a lot of sticks, including the emissions trading and carbon tax in the UK, and through the CSRD, as you mentioned, the Corporate Sustainability Reporting Directive. Large enterprises based in Europe are indeed under a legally binding obligation to provide significant disclosure on their carbon footprint and their kind of environmental impact more broadly. So this is one area where there is a noticeable difference between the US and Europe. And for the next 4 years, we can safely assume that these kinds of policies will continue to evolve in Europe, but not in the US, at least not at the federal level.
Right. But although there is initiatives and there's pending laws on the state level in California and a few other places, but I'm not sure where does it stand now, but that could be, and the state level will have impact also, right? In your opinion?
Yeah, it's a very good point. And I mean, just look, energy policy in the United States is something that has always been divided between federal and state. So, I mean, that's certainly always true in relation to electric power. And the agencies that are predominantly responsible for regulating electric utilities are almost entirely state-level utility commissions. At the federal level, for example, we have never had a renewable electricity target for electric power generation. Now, there are plenty of states, including, by the way, some Republican-controlled states like Texas, Missouri, Montana, that are requiring utilities to generate renewable electricity, not to mention California, New York, and so on.
Yeah.
But this policy has never existed at the federal level. So as far as reporting, something similar to the European CSRD, again, I am definitely not expecting anything like that from the U.S. federal level for the foreseeable future. But certainly some state level initiatives can be applicable. A good example of that is what we call these energy audit mandates that several states and a lot of cities have in the United States. So if you're a real estate company that owns large buildings, skyscrapers, corporate offices, or shopping malls, etc., in San Francisco or Chicago or New York City, and there are some states, including California, that have this as well, you are obligated by law to measure, audit, and publicly disclose the carbon emissions and the energy usage metrics of those buildings. So it has nothing to do with individual homeowners, but for the commercial real estate companies, these are policies that need to be complied with. So again, not at the federal level, but state and local.
Interesting you mentioned that. From our experience, we see more and more, mostly the bigger real estate companies, they are investing heavily in sustainability reporting. They're growing their teams and looking. I'm guessing a lot of that is to do with the regulation requirements by municipalities and so on. That's interesting. Before we wrap up, I like to give kind of a bonus questions if you will allow me.
Please.
Kind of more inspirational, I would say, and I ask all my guests. I'm curious about what motivation drivers you see evolving in the near future for sustainability, and near or long term. You can take either one or both.
So we touched on differences in climate policy between kind of Washington and Brussels, and certainly those differences will continue to persist. But there is actually a trend behind energy transition that is applicable just about everywhere. I mean, we see this in the US, we see it in Europe, we see it in China and other places, and that is energy security and energy resilience. So energy security might mean having energy supply be safe from geopolitical risks. And this is something that anybody who lived through the European energy crisis in 2022 certainly remembers, when Russia cut off natural gas into the European market. Well, how did Europe respond to that? They dramatically reduced their usage of Russian natural gas particularly, but in fact, Europe is using less natural gas overall. So not just from Russia, but even from other sources. Europe is using less gas, and instead Europe has made tremendous efforts to push for more wind, more solar, more energy efficiency. So they do not need to import as much energy, which is at risk from abroad. Now, we do not have that same level of geopolitical risk to energy supply in North America because, of course, we have lots of domestic energy. However, in North America and elsewhere, as all of us know, consumers and businesses know from our individual experience, the electric grid periodically shuts down. And that might be because of a hurricane or a wildfire, or even just mechanical problems. A few weeks ago, 90% of the population in Chile lost electricity for a day. There was no natural disaster. It was simply an equipment malfunction on the electric grid. So if we, as consumers and businesses, have more on-site distributed generation, which might be a rooftop solar, it might be a battery backup system, etc., we will be better protected from situations when the electric grid shuts down. And from the perspective of entire countries, right, like Germany and Finland and so on, they are more protected from being dependent on Russian energy supply. And in places like Brazil or Canada, the energy security problem in recent years has been droughts causing disruptions in hydroelectric generation. So the solution in Canada and Brazil is to use less hydro to have a more diversified electricity mix. And that is also a means of being more energy secure and energy resilient. So anywhere we live in the world, there is some problem in our energy supply, some risk that can be remedied or addressed with sometimes renewable, not exclusively, but predominantly renewable and energy efficiency and better backup power systems. So a lot of different solutions, and this is where great example of energy security and energy transition moving in the same direction.
Wow, amazing. Yeah, that was I like that answer, and then that makes a lot of sense. And thank you for that. Pavel, thank you so much for joining me today and having this talk with us. Is there anything you'd like to add before we wrap up?
I think we covered it. Thank you, Doron.
Thank you. Yeah, I mean, we got to cover from geopolitical changes to financial markets to sustainability, and we covered energy, I think, in really in an elegant way. Um, I would just add to that, if any one of our viewers have any further question for Pavel, feel free to contact him on LinkedIn. And thank you everyone again for joining us today. If you have any question for Seven Environmental, feel free to send us an email to hello@sevenenvironmental.com or reach out to us on LinkedIn. For more Inside ESG, subscribe to our YouTube or Spotify channel. Look for Seven Environmental. Pavel, thanks again for joining us today, and thank you, everyone. Until next time, goodbye.
Bye bye.